So we're going to continue the program, and I'm going to call up Anna Irrera from Bloomberg and David Brear, dear boss. Hi.
That was a good introduction, Maurizio. Thank you.
Yeah, I don't need to introduce. All right, so I'm here with David Brear, who's Mauricio's boss, and that's all the introduction he needs. No, he's the CEO of 11FS, and I'm an editor at Bloomberg News, where I'm on the crypto team. So we're going to talk about an important topic, which is user experience in crypto. It's not a new industry anymore, so they don't have much of an excuse for some of the...
Yeah, you'd think it'd be a lot better, given
Yes.
it's not a new industry in that sense, right?
Right. So do you want to maybe give us the lay of the land? Which are the main pain points in crypto user experience?
Yeah, I think broadly, I guess the challenge is learning sort of really where the industry's come from. I mean, it's very reminiscent, and I'm sure everybody in the room sort of recognizes this, but it's very reminiscent of sort of early days of networking rather than fintech. You know, fintech was born out of a cross-section of design and technology and everything that went with it. So there was kind of good user experience from the get-go in that sense, because almost it was the differentiator from the big incumbent banks in that way.
That was a selling point.
Yeah.
Part of the selling point.
Well, why change? Why move to something else in that sense? But really, the sort of feeling with crypto, and definitely if you look at the experiences that have been delivered, it does feel very technology-led. It's a bunch of tech guys. I can say this with a lot of love, guys, which having been a hardware and software engineer in the past, it's like it's a bunch of geeks kind of making up interfaces for themselves type thing. And most normal people are not like you. And really, this is the challenge. Like, actually, if you want to get to mainstream, you're going to have to crack some of these problems. But thankfully, a lot of people have solved these problems, right?
Mm-hmm. Have they? So not in crypto, you would say?
Not in crypto, no. Yeah. And similarly, actually, when you look at most of the financial services, things that are happening great now, it's not financial services reinventing or inventing something. It's stealing with pride when it comes to other industries in that sense. So, I think even the best experiences that we're seeing in, payments or, more traditional SME banking or retail banking are kind of borrowing good ideas that the Apples, the Googles, et cetera, have made mainstay when it comes to mobile interfaces or just good experience in that sense.
Is there one user experience problem in crypto that you just can't stand, that you think has to be solved ASAP?
I mean, I think we've got a couple of slides actually that we can kind of pull up. But my sort of big, if you flick onto the next one, I just don't like people who don't talk like human beings, if I'm honest with you. And if I'm honest, I think the main thing that happens in crypto so often is just all of the acronyms. I feel like I'm talking to the wrong audience, because you guys are like, you're loving all of this stuff. But any industry that uses acronyms, and this is all of the problems that we've seen with big banks and APR and everything that people just don't understand. Fundamentally, treating people like human beings and talking to people in an inclusive way.
You say while having an acronym in the slide.
What jobs to be done? Yeah, I know, right? When I should prepare my own slides. So I guess the key here is moving from a functional thing of achieving, which address and where am I sending and signing up for a wallet and all of these things that are alien to normal people. How do you move from that? Well, yes, it's to achieve a functional piece to something that has a little bit more emotional impact in the way that services are really delivering that in financial services more broadly. I think the challenge, when you go back one, the challenge in terms of the, next one, with regards to the overview of where people actually are, is the impact is just missing in that sense. Back one slide, sorry. I really should have a clicker as well. We talked a lot in terms of, yeah, that'd be great. We talked a lot yesterday with regards to the lack of a regulatory view, and we sort of heard a little bit from somebody like Matt Hancock on, well, people should go and figure this out and break things and learn from that. But that doesn't lead to great unhappy paths, That leads to pretty shitty unhappy paths when it comes to things just disappearing in that sense. So,
like your money in some cases.
Yeah, like your livelihood or all of your savings. That's not a good thing to disappear. And then lastly, the industry from a financial services perspective, fintech more broadly, has got very good at teaching people where things are, how things work, why things should be in the way that they should be. And we've picked out a couple of examples that have done this quite well in that sense, which we'll sort of go through in a little while. But they would be the big ones for me. I think it's a strange one, because the industry seems to like to have And it has begun as a sort of a bit of a boys' club when it comes to, acronyms and, I know this stuff and you don't know this stuff. But the only way really they're going to be super successful is if they make it so easy that everybody can understand it.
Is there a risk though if you make it too, I'm jumping ahead a bit, but if you make it too easy? And I guess it's a question in finance broadly, right? Yeah. I think you'll have some examples on gamification, but some people have gotten in trouble for that. Like, what's the balance? It's a very delicate one, right?
Yeah, I think gamification shouldn't be used as a way of sort of trivializing, the seriousness of financial services in that sense. But I think you've got to strike a good line in this, in where you can really sort of get to. I don't think it's gamifying it like making everything, a cat doesn't meow every time you make a payment type thing. That's probably not the way of trivializing financial services in that sense. But bringing the ways in which you engage with things to be much more akin to experiences that you engage with all of the time in that way. Definitely sort of too little friction, particularly in payments, can lead to a bad outcome for customers, as in money disappearing again. But this is where I think we need the medium of the intentions of the organizations to serve customers in that way.
You mentioned it a bit, but what is the impact for users in crypto because of this not so optimal user experience?
Yeah, and that really gets to the heart of what's the point in crypto as an entirety, right? What's the benefit to customers in doing it this way? Because there are obvious benefits in terms of moving outside of some of the traditional financial services players, but actually that still has to be within safe confines of normality. Me and you've talked about this in the past, the amount of taxi drivers that suddenly are giving you a hot tip of where you should be putting all of your money, but you stop hearing from those guys pretty quickly after that whenever there's a downturn. There needs to be all of the controls in place to do that, but actually there needs to be the level of experience that makes it accessible as well. I do agree with you, though. I'd love to know your view. You're as smart as I am in this sense, so I'd love to. What do you think in terms of do you think lowering the barrier is too low as a problem?
I guess as long as you have all the right disclosures in the right places, but then what is the balance between too many disclosures and then you're like, oh, I won't do it anymore. Like it seems pretty delicate. But there are other areas in finance where they've struck the balance, I guess. But I was thinking about, gamification. I thought of Robinhood. Like, is confetti too much? Like, what is the
Where is
balance?
too much? Yeah.
Exactly,
where does a good experience and too little friction, which means people are not really aware of what they're doing in that way? We've got a few examples to maybe sort of pull up. So actually, when we sort of talk about going from functional to social and emotional, there's some really good examples. Daylight's a great one. If anybody doesn't know it, it's a bank set out for LGBTQ community over in the US. They've done a great job of really pulling together the community around financial services. I think there is probably no stronger community than the crypto community if you can really get them motivated, get them going, getting them excited in that sense. And the way in which they foster that innovation, foster that communication actually on their platform is pretty impressive. Shares do a pretty good job of pulling together a group of people to allow them to understand what other people are doing in a similar way to something like eToro does in that sense as well. And I think there's lots of things that can be learned from that about creating some social attachment to what can be a pretty isolating skill set to decide on your own in that way as well. Around regulation, we pulled out PayPal. PayPal have done some really interesting things. I probably wouldn't take their advice on some of the fines that they've been sneaking into terms and conditions lately in that sense. But when it comes to breaking down actually very difficult terms, explaining them like normal human beings, going through how these things work, putting them in the context of the journeys that they're doing, they do a pretty good job of that. And then lastly, when it comes to just-in-time learning, there are a few good examples of this. Wise do a really good job throughout their process of kind of highlighting other areas where actually if there's better rates out there that actually could be benefiting you as a customer, or the advice that they could give you throughout that process. They do that contextually to the process that you're actually in, rather than having education, your advice, your guidance piece as a completely separate capability in that sense as well.
So just mentioning Wise, right? Like they're showing you how much you would save. It's quite clear, like use this rather than something else is how much you would save. So in crypto, because the fees are still quite high, like how would you envision that? Because like use this, we charge 20% on transaction versus 21. Like, can you actually, because it seems like in fintech it's more simplifying something that already exists, where it's a mixture of building something new. So
yeah, it really depends on what you're using it for. If you're using it for payments, if you're using it for the on-ramp, off-ramp side of things, it really depends on sort of what part of cryptocurrency and what part more broadly of the industry you're engaging with in that sense. But there are examples like this that would work very well in if you're using it for digital assets and you're buying into a system. Using it for that, I think, breeds a level of trust actually in the system. Are Wise always the cheapest? No, but it's kind of an edge case where they're not. And I think it almost pushes them as an organization to be much more competitive in the quant and the qual in that sense. You've got to be pretty confident with your prices if you're going to start putting them up at the front. We actually tried something very similar to this with Aviva back in 2015, maybe earlier than that. If we showed everybody else's prices, even if we weren't the cheapest, it just reinforced trust in the process that actually people were not having to disappear from your journey to go and do all of the research themselves, but essentially you're providing them with a level of transparency that most players don't.
So you mentioned transparency, and it's kind of a rallying cry of crypto and blockchain at the beginning, right? But in practice, some platforms aren't that transparent, whether it's unintentional or intentional.
Sure.
It's not for us to discuss, but in some cases, can they actually, like you mentioned, being clear on your terms of service, like I guess you really need to want to be clear before you can actually, or transparent,
Yeah.
right? Some platforms actually are a bit, you don't even know where they're based, so
Sure.
like, how much is it for developers to kind of solve, like the people that work at these companies rather than the people that run them, or the industry as a whole? Does the industry need to be more transparent and easy to like grasp before the products can be?
Yeah.
Easy? Yeah.
So I'd say there's two sides to that in that sense. We're in a little bit in the Wild West when it comes to the lack of regulation in that sense. So, in banking, there is a very clear code of conduct. There is very clear financial promotions. There is all of the things that you have to adhere to or else. There's kind of not that right now in this space. And actually it kind of requires, it's very similar to what we saw, we heard from Plaid just a second ago. It's very similar to what we were sort of seeing with data. There wasn't real clear regulations. Different players have taken different approaches, or even into new forms of financial services like buy now, pay later. Right? We've seen Klarna do a lot in order to ensure that actually the industry is moving in the right direction, working with the regulators to make sure that actually there's the pieces put in. And actually the organizations that do that, as opposed to the ones that make it difficult for them to work with in that sense. I think customers will vote with their money in that sense, in terms of who they choose to work with and where, because in financial services more broadly, in this topic as well, we've got greater choice than ever before. And the differentiator between the people that you do put your money with, the people who you trust with your money, will be down to the ones that make it easiest from an experiential perspective to engage with in that way. And again, this isn't just for people in this room, it's for normal people as well.
How much is it a user experience issue rather than a utility issue? So can you make something that's not really that useful? And I'm not saying crypto in general is, but maybe an element or a product that even in fintech, you might have products that are in the end not really solving anything. Like, how much is that the problem rather than the front end?
Yeah, look, you can have a beautiful experience that's completely pointless and you're not going to get very far, but we've got to find a happy medium between those two things. And I think this is the challenge at the moment is, taking it outside of that community where there is such a huge belief that this is the future of financial services in so many different guises, to introducing the mainstream audiences to those things, because there isn't enough people in this community for this to be only the people that it impacts in that sense. But absolutely, a great UX and a crappy product doesn't solve the problem. But equally, an amazing product with very little engagement from an experiential perspective doesn't lead to mainstream adoption.
Because sometimes, even in our job, we have to explain what a company does, and when you try to figure it out, often involves a lot of acronyms. You're like, now I get it. Like, what are they actually? So I wonder when you're trying to develop something, if you oversimplify it, you'll realize what's the point? But
yeah, I mean, there's a lot of, and again, learning from what we've seen in fintech from 2008 to here is, is it a feature, is it a product, and actually fundamentally, is it a sustainable business in that sense? I think this is where, removing a lot of the hype from what it is that people are doing. Are they just reinventing the wheel in terms of the processes that are there, or fundamentally do some of the things that they're putting in place, strip cost out of an industry that so desperately needs, OpEx being changed in that sense. 99% of startups fail, right? You've got to have a great idea, but you've got to execute incredibly well to get there as well.
So I diverted you from the slides.
No. I think Wise is a great example in terms of what they were doing. And actually, I mean, I put Revolut there as a good example from an educational perspective as well, because I think they had like millions of people sign up to quite a rudimentary explainer of the crypto market. Interestingly, I mean, they did have crypto purchases for a couple of years before they introduced this. So God knows what everybody was doing before they started getting the education in that sense. But definitely the way in which they explained the market, the risk that was there, and actually the sort of engagement that they saw with that clearly showed an opportunity for doing that a little bit ahead of the regulation in terms of explaining where those things actually are. So really, from my perspective, they're the key things. I think we've learned these journeys in fintech. We've learned these. We've painfully, we've seen these experiences be, even in the early days of mobile banking and traditional banking. We've seen, utility, as you say, be lost because the experience is so bad. Similarly, though, and I think to your point, we've seen if somebody is desperate enough to engage with these things, that they'll put up with an incredibly terrible experience. Like, I think, my background, having been at Lloyds Banking Group, before we even had a lending journey that was mobile optimized, something like 60% of our loans were coming through mobile. And actually, that shows a level of need for those things in that sense. And I think we've got an industry putting up with pretty crappy experiences because they believe that the outcome that they'll get to is worth it. I think with a little bit more finesse and a little bit more attention to the experience in that sense, particularly around not just the happy path, but all of the multiples of the other side of that as well, then we can go from just the early adopters and the geeks in the room to being in a situation where we can really take this stuff mainstream.
So now, obviously, it's crypto winter, so companies have laid off lots of people. So is this a challenge? Obviously, like developers that are good are in high demand everywhere. Like, what do you see? Like, how do you see this playing out? Do you see many people are going back to big banks? Like, will this mean that user experience stays kind of crappy?
I'm not sure. I don't think. I think this is not. I don't think this is at this stage. I don't think it's just a technological change. I don't think it is just a small group of people who will will this into existence in that way. I think the momentum that's been built up. I mean, the VC investments that have been made. People are going to want to see some returns in terms of where those things are. I think we'll see more of a normalization of actually bringing this stuff into the mainstream. And while there's been a lot of engineers being laid off, there's also been a lot of designers being laid off. So I think people might pick up some great talent in the next couple of months that actually means they can pull this stuff into mainstream by focusing a little bit more on the things that really have made fintech and financial services much more accessible in that way.
What are the things that need to be solved first, you think? Where should they start?
I think you hit the nail on the head earlier on. You've got to get leadership to care about this stuff. And very often what you're finding in these organizations they are part of the community and they're part of the sort of tech revolution in that sense. So, realizing that this stuff matters and actually is the difference between being able to scale your customer base from the community to much more mainstream, that's really going to be where it will be. Again, it's very similar to, as much as there's a kind of slightly anarchic and, Viva la Revolution type vibe, then there's a lot of the similarities between the big banks and the crypto right now, as in getting them to learn that customer experience matters and fundamentally makes a difference between when there is a very competitive landscape in the way in which people can engage with it, learning that this stuff is going to be the difference between somebody choosing you and somebody else. I think that will very much focus their minds in terms of the steps that they take from here.
Do you think it'll be a competitive advantage, or because people are kind of used to the service as it was? You know, if you're a hardcore crypto person, you've been there for a while, like, will people switch because it's easier to use? Like, what can we learn from fintech there? Like,
Yeah, switching is going to be difficult because, again, nobody really wants to engage with this stuff until they have to in that way. So at that point, you're going to have to bring online something differentiating and something really significant to get them to switch. Very similar to what we see with, you know, current account switching numbers in that sense. But we are at nowhere near saturation when it comes to the market. I don't think we're fighting for the people that are, you know, have wallets and are actively engaging with the community now. I think the new wave is fighting for more and more mainstream as these things become more and more mainstream in that sense. And there are a lot more of them than there are of us in that sense. So yeah, I think it will be new customers rather than switching.
what were the main mistakes that fintech did over the past few years that you know people should be warned about?
I mean, where do we begin? Like, do you want to talk regulatory or like
no,
experiential
the experience,
or leadership or funding?
Yeah.
Yeah, I mean, I don't think we've got enough time for that one in a level of detail that we could go into. But I mean, I'd say, you know, going back to the point, UX is the difference. When you have a choice, you will choose to work with the organization that talks to you like a human being, that engages with you in a way that you want to be engaged, in a channel that actually you preference. And if you don't get that level of experience, however, you know, beneficial the outcome actually is on the other side of it, you know, that bad experience will wear down on the relationship that you have with your customers. And we've seen that again and again. You know, we're seeing almost a reset in what good customer experience looks like. You know, we have seen it in the fintech industry, the Monzos, the Starlings resetting what that looks like. You know, for a couple of decades, First Direct were king of the hill, and now that has changed. But, you know, I think learning from all those things and, you know, learning from those scars that those organizations have got on their arms of that, and learning that actually even with in many instances, what we've seen with Starling and Monzo, slightly inferior product with a great experience and engaging a community in the way can fundamentally be the difference between success and failure.
You think the fintechs that are getting into crypto may help transform it a bit, or does it have to be like homegrown from crypto, from within, you know?
I think there's a massive opportunity for that. I think this is where the banks are getting into the game as well. You know, product versus distribution is always the thing, right? If you've got 5, 10 million customers and you can do distribution of a new thing and bring it to them, you know, there's always going to be a higher bar when it comes to the experience at that point. But most of the players, and I say most because not all, but most of the players that have those large distribution elements are also heavily regulated industry players as well. So the way in which they step into that market is going to be very different from how somebody who is, you know, from the ground up, you know, crypto from the get-go in that sense. But it's going to be an interesting battle, right? You know, it's always the same way in every market. The big incumbent players and getting to distribution of new interesting things, or the startups and scaling up in terms of where they get to. But, you know, one thing's definitely for sure, you know, good experience is not something that you can choose to not have. In everybody's walk of life, it's just a necessity.
So I've never heard any entrepreneurs being like super happy about regulation in general, right? It's always seen fintech as, you know, a barrier to entry. What impact will it have on user experience in crypto? Do you think, like, what will be the balance? Do you think it'll help make it easier for users, harder, because all of a sudden they're gonna have to throw all these like terms in and it'll be like more clunky? Like,
I mean, it really depends on where they go. I think if you see what we heard yesterday, then it looks like the government, it looks like the regulators are going to be taking a much more of a, if you go and break things type approach. And
unless they decide to change their mind before they.
Well, they can change their mind later, and
Okay.
then you're like, yeah, that's not quite what we meant, and come back with the stick to a certain degree. But the absence of those things leads to customers not really having a set of expectations of what. And again, what the unhappy parts look like in that sense. And I don't just mean you bought a bunch of stuff and suddenly that ape you bought or the coin you bought is worth nothing, and like, who do I shout at type thing. You know, I'm not sure the financial ombudsman right now would even return your email in that sense because it's outside of their remit. But I think just when it comes to what happens if their service goes down, what happens if you can't engage with the customer service representatives to understand where how to even address your problems.
Yeah.
There's almost no recourse in any way, shape, or form, which is pretty terrifying. Like
Yeah.
that's the terrifying part. We're increasingly putting financial instruments in a way that the regulator wouldn't understand or want to engage with in the hands of normal people out there who probably can't afford to lose the money that they're putting into these things. And that for me is the most terrifying thing. You know, we're seeing celebrities endorse things to get people to part with money in order to be in a situation where, you know, there is no recourse to this at all. And it's not just here, it's, you know, internationally. I feel like we've gone off on a tangent. This sounds like more like one of our chats backstage than it does.
Yeah, but you know, again, to chat about one thing we've spoken a lot about, you know, in the newsroom is all these hacks, right? And it's not directly connected, but thinking about regulation, there seems to be a bit of an attitude still in crypto where, you know, you get hacked, oops, like sorry, or like that's your problem. We told you not to keep it on the exchange, etc.
Yeah.
And again, like if the exchange crashes because there's a glitch, and it has gotten much better than it was before. I remember when like orders were like if 2 million would crash an order book, right, on big exchanges. But you know, like is like regulation there the only way where you'll get sort of recourse? Because imagine if a bank like got hacked to the extent we've seen some of the crypto bridges get hacked, or you know, or even just crash for a bit and like, oh, sorry, you can't access your withdrawals now for like 20 hours. Like imagine what would be.
Yeah, I mean that has happened. We don't have to imagine it, right? TSB and NatWest, and you know, like this has happened. But within the regulation, there is recourse. There is, you know, you will not lose your assets up to a certain amount, right? You know, we've seen all of these things be put in place for, you know, not for no reason, but this stuff has happened. You know, banks have disappeared prior to those regulations, and people have lost lots of money. I think often the sort of slightly revolutionary, you know, let's burn down the systems. Very much, a lot of these systems are in there for very good reasons to protect customers because bad things have happened without them, and therefore we've had to put these things in place to try and protect people. So I think it's interesting when you talk about, I mean, I'm sure you get as many as I do, but the random DMs of something that's been transferred to my, you know, like, and it's like, these things are happening in the same way as the phone calls around PPI or the text messages that you get. These things are happening because people are falling for it, and therefore people are making money out of people's lack of understanding of you know, really how to protect themselves. Again, I come back to the organizations that take the time to engage with the community to help them educate themselves and therefore protect themselves are probably going to be the ones that people choose to work with. It is difficult, to your point, if an exchange just disappears. I mean, if a bank just disappears, like actually the dealing with that is difficult, but at least there's a regulator there to regulate, at least there's the government there to try and, I mean, obviously propping banks up is probably not going to be the direction to take again post 2008, but definitely having all of the regulation in place as that backstop, that safety net, I think is critical to mainstream adoption.
Yeah, and I guess
at any point.
banks need to have somewhere to default if something happens, right? Like if one data center goes down, they know where they'll go next. I'm not sure whether there's the same level of requirements in crypto for now, which means that if you're like something happens for a while, you might not be around, unless the company has decided to implement that because they care.
Well, not even default, like liquidity levels, and you know where the money's going when people are putting it in, and you know there's all of this that actually people have kind of thought through, and you know it can sound sometimes like it's applying old rules to a new technology or a new industry in that sense, but fundamentally, again, these things are. I think we are going to learn the hard way a number of times in this new industry as it evolves and as it shapes out. I think we'll get it wrong a lot, and there will be a lot of people that fall out of benefit in that sense. But I think we've got to have the central bodies that catch up with the industry and get ahead of it. The challenge is there are nefarious players in every market, and there's probably no more entrepreneurial people than criminals, sadly.
Yes. On this, is there anything else? I think we've run out of time. Oh, we have some questions here. The first one is creating great user experience expensive, and where does it come in order of priority in a budget?
Again, I think that one's super easy. If you have a great product but a shitty user experience, nobody will use your product for very long, particularly if somebody's doing something better in the market. So it's expensive if you get it wrong, rather than expensive if you don't try and get it right.
And final question, which is very technical. For DeFi user experience, what is going to be the catalyst to fundamentally reset web browser wallet journey?
I have no idea, and there's definitely more than 6 seconds that we need to go into that one in much more detail. But whoever the question was, happy to grab some time afterwards and see if we can work it out.
All right, thank you so much, David.
No worries, thank you.